Hello and welcome to your budgeted cost of goods sold statement video as requested. So here we will be going over each of these individual areas. I'm just going to write in these line items already because I don't think that's the part that we really want some explanation about. I think it's the numbers. Okay. So to start with, whenever we have our work in process inventory, I'm going to go ahead and say for this course, let's go ahead and assume that work in process inventory beginning and ending will always be 0. Okay. So now we have to find our 3 manufacturing costs, which you know are direct materials used, direct labor, and manufacturing overhead. So first thing we need to find is our direct materials used during the period. So we're going to start with our beginning inventory. Keep in mind we are doing this for the quarter, and the first month for the quarter is going to be January. So we have to start with our January column. Beginning inventory in January was 14,000 feet, and it was $2 per foot. So that means that our beginning inventory is 14,000 feet times $2 each, $28,000. Moving on to our purchases. This is our direct materials purchases budget. It doesn't really specify here, but this is trying to help us decide how much we are actually spending on purchasing materials. That would be $102,080. Our materials available for use, as you know, definitely by now, is that it will be added together, our beginning inventory and our purchases. And then we have to deduct out our ending inventory to see how much in direct materials we actually used. Keep in mind, same idea as we did for the beginning inventory for direct materials. This is a quarter, so our ending inventory will be in March. Good. So in March, we had 10,240 feet, and it is $2 per foot. Keep in mind, we always have to use USD. In our statements, we have to follow that monetary unit principle. So when we deduct out our ending inventory from what was available for use, we find how much we actually used, and that is our direct materials for the period. Next is our direct labor. We take a look at our budget for direct labor. We see that during the quarter, we expect to spend a total of $87,680. And then for overhead, we expect to spend $55,110. And that's the whole reason those whole statements were there. Now we can ignore them for the rest of the problem. So now let's add up our 3 manufacturing costs to find our total manufacturing costs. And now we're seeing our formula to find our cost of goods manufactured, beginning WIP plus our manufacturing costs minus our ending WIP, which I said before would be 0. That gives us, I'm going to do the formula, even though I know we don't have to, just to reiterate the fact. All right, so $252,390 is our cost of goods manufactured. Right? All right, next we need our beginning finished goods inventory. So where do we find the units that we're manufacturing during the period? Manufacturing during the period. Here's our production budget. And we do our production budget based on our finished goods inventory. How much do we have to add to finished goods in order to cover our sales needs, to cover our ending inventory, and then, so on and so forth. I won't get too deep into that since that's not the topic of this video. But for beginning finished goods inventory, remember it is the quarter, so we're going to go to January to see how much we started the quarter with, and we see that there are 0. So 0 finished goods inventory. And then our last step here is to find our ending finished goods inventory. Now, if we go again to our production budget, we see that at the end of March, we had ending finished goods of 1,400 units. And that's an issue. It has to be in dollars. So we need to find out what the cost of these units are. And our first step to do that will be to find the manufacturing cost per unit, right? I know the total amount that I spent on manufacturing my goods. And I know how many units I produced with that $252,390, right? So I produced a total of 27,400. and I should be saying estimated to produce 27,400, right? Because this is a budget, so it hasn't really happened yet. Let me press enter just so you can see what our result is. So we see here that the cost of each unit is approximately $9.21, right? So that's $9.21, and we have 1,400 units in our ending inventory in our last month of the quarter. Bring that over a little bit. So let's multiply that by the 1,400 units that are left. And we find that our ending finished goods inventory has a cost of $12,895.84. In our last step, cost of goods manufactured plus our beginning finished goods minus our ending finished goods, like you know, give us cost of goods sold, right? Just go ahead and format that real quick so I'm not ashamed of myself. All right, there we go. So please keep in mind when you're going through this, if we're looking at a full quarter, we can't just go ahead and use the totals if they genuinely are totaling up every month. So for example, this, let's do beginning inventory. Okay. So for beginning inventory, we started with 0 in January, 2,200 in February, and 1,000 in March. So this 3,200 is the sum of all of the individual beginning inventories that we had, right? So we can't use that. Our focus is on what did we have on January 1st? And then for ending, how much did we have on March 31st? Okay. So go ahead and do this several times. I promise you that you are definitely getting a problem like this on your exam. So please make sure you know that budgeted cost of goods sold statement. Okay. And happy studying.